Guys, this is S&P 500 weekly technical analysis for the week of April 28th. On Monday, on April 21st, S&P 500 aligned perfectly into the bearish cycle, into the third bearish leg. And exactly when it was supposed to come down to 47xx, the entire market was manipulated heavily in order to change the trend. And this was something similar to what we have seen here. And then the manipulation was there continuously for 3 days. And now because of these 3 days of heavy bullish movement in all of the indices, the market has aligned to the short-term bullish trend. This short-term bullish trend means that the market is now heading to the cluster of moving averages on the weekly chart because as per the rule, whenever the market enters into the bearish trend or in the bullish trend, in the long term bearish or bullish trend, then as per the rule, it is under technical compulsion to retrace back and to test the moving averages and then to realign itself to the long term that trend. And currently at present, this is the long term bearish trend. Now, why I am saying that there was a very heavy manipulation for 3 days? So I am a technical person and let me show you technically why there was a 100% confirmed manipulation. So if you notice, this is the MACD. MACD means moving average convergence divergence. So generally the MACD gives a very smooth movement. But now what happened is that on 21st of April on Monday, there was a confirmed bearish crossover and MACD turned bearish. And in my pre-market analysis and also in my midday update on Monday itself, I mentioned that now there was a very heavy fall. There was the open equal to high condition and market is coming down. So this is the beginning of the third bearish cycle because the MACD has turned bearish. And only a heavy manipulation can change this. Otherwise, nothing in the world can change this. And then in my first update on April 22nd, on Tuesday, I mentioned that the MACD of the S&P 500, which was changed to bearish on Monday, but now that MACD has again turned bullish. That is why without manipulation, this kind of change in the MACD was impossible. However, after this heavy manipulation on April 22nd, there was still one condition that was also supposed to be seen. Otherwise, the bullish movement and this bullish momentum would have failed, and again a bearish movement. What was that condition? That condition was 532x. However, surprisingly, on Wednesday there was a heavy gap up open at 5396 approx. Okay, and this open was much beyond the 532x. So immediately after open, it was clear that no, the rejection or this thing is not going to happen. Rather, market is going to move up, market is going to sustain. So on Thursday, the S&P 500 moved up, and when it moved up, it managed to sustain above 542x for many hours. Okay, this was very much clear that now the bearish side is limited and it will move up. Its initial or this heavy resistance will be 546x, and after gaining 546x, it will be 548x, and that will be the maximum. It can come down from 548x to 546x, but now the 546x will hold the market, will give the support to the market. Finally, it closed above 546x. And also the previous high, that was the manipulated high, that was 5481. So this was very much clear that on Friday, next day, there will be 5500 range. It will come into the picture. And in my comment at 10:50 a.m. Eastern time, I mentioned that because the market is not showing heavy momentum, this means that now SP500 is expected to trade in between 546x and 550x. And the 548x will act as a tiebreaker. However, if the S&P 500 manages to gain the 550x, in that case, the maximum it can gain is 552x. So now it will trade in between 548x and 542x. What I'm trying to say here is that the market remains predictable even in the heavy manipulation times. The only difference is that during the normal times, during the technical scenario, the next day gap up or gap down open can be predicted. Then again and again, I predicted the same. For example, on Monday, on 21st of April, there will be a gap down open. Okay, I predicted this, the gap down open, in the previous S&P 500 weekly technical analysis. Now, in case of the manipulation, once the open is known, once the open price is known, then the movement for the entire day can be predicted, just like what I predicted to happen in these three heavy manipulated days. So while the others panicked, okay, that what is happening or this thing, I informed my Patreon community members through these daily precise updates and the comments that, see, no need to panic, this is what is happening. Now that we know the open price, this means it is going to behave like this. It will move up, then will come down, support, will move up further, or in this manner. So guys, if you also want to get these daily precise updates every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. So the weekly, the technical obligation on the weekly chart, it was pending, okay, when it was coming down, okay. So when it was trading around here, okay, in late March 2025, okay, and it was moving up, it was in the bullish retrace. That time there were chances that it will move up and it will test the moving average, and then there will be the continuous fall. However, that did not happen. It came down, okay. Then through manipulation, 11% intraday, again it tried to move up, but again it came down, and now it is moving up, okay. So it is moving up to the moving averages to fulfill its technical obligation. That's it, okay. And also I will show you the historical movement so that you can understand very clearly what is going to happen, okay. Now the second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, the short term picture is bullish, okay, because through the lower level charts, on the daily chart and the weekly chart, the long term picture is still bearish, the trend is still bearish. But through the short term technicals, okay, through the lower level technicals like hourly charts also, okay, the S&P 500 has turned bullish. So this is why I'm saying short term bullish trend, okay. The long term long term trend is bearish. So this means that this is the short term bullish retrace, short term bullish trend, just to fulfill the technical obligation, okay. Now I will tell you one condition wherein this picture can change a little more, or the market can remain a little more bullish on the daily chart. Third point of the agenda is the probable movement of the SP500 from April 28th, which is Monday, through May 2nd, that will be Friday. So whatever is going to happen in the S&P 500 from Monday through Friday, that I am going to discuss in the last point of the agenda. However, guys, let me remind you again, all of these three sections are interrelated, are interconnected. This means that when I say the probable movement in the third point, by the time I discuss the third point of the agenda, or the probable movement, I have already covered 30 to 40% of the probable movement in the first and the second point of the agenda. This is why it is advisable that you should watch all of these three sections in order to understand what is going to happen in the entire stock market in the next week. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, one candle means 1 week. Now let's first analyze the candle. A very heavy bullish candle. Just like this candle, very heavy manipulation was there on that day when the president announced 90-day pause, okay, on the tariff. So 11% intraday movement was there. But in this week, the S&P 500 has gained 8%, 8.5% approx. Again, because of these three days, Tuesday, Wednesday, Thursday. Anyways, whether manipulation or not, doesn't matter. We simply stick to the technicals, and through the technicals, we can predict the precise movement. Okay. Only thing that cannot be predicted through during the manipulation is the gap up or the gap down. Otherwise, okay, once the market opens, once the market comes into the session, okay, it becomes predictable, just like what I did in the previous week, and I helped my Patreon community members to trade accordingly. Now The last candle, it's a very heavy bullish candle, and the closing of this candle is above the high of the previous two candles. Okay, now this is sufficient to trigger a gap up open. What? A gap up open on Monday. However, this is not the case here, because if you notice, there was no absolute engulfing in this case. Okay, even though it was manipulated, all of that now, after the manipulation, technicals are aligned in that direction. Everything is saying a gap up open on Monday, but because there was no absolute engulfing in this case, and also the S&P 500 closed below my technical resistance, and other than that, the S&P 500 has closed inside the Ichimoku cloud. Okay, so all of this indicates that yes, irrespective of any open, there will be an initial or intraday bullish movement, but a gap up open cannot be confirmed. No. Okay, gap up open cannot be confirmed, but an initial or intraday bullish movement will be there on Monday, right? Now let's analyze the weekly chart of the Dow Jones. Okay, see, and once again, I always analyze the Dow Jones, because many a times the S&P 500 gives us or tells us, okay, a false indication, okay, of the movement. That is why after analyzing the chart of the Dow Jones, it is very much clear whether whatever we are anticipating to happen in the S&P 500 will happen for sure or not. Okay, so this is the chart of the Dow Jones. In case of the Dow Jones, okay, a good bullish candle. Okay, but it is not as heavy as the S&P 500 or the Nasdaq was. Okay, S&P 500 and Nasdaq are the tech indices. Okay, whereas Dow Jones, okay, there are 30 stocks from all of the sectors. In case of the Dow Jones, if you notice, the closing is not equal to the high. Closing is below the open and the high of the previous two candles. It failed to breach the open or the high of the previous two candles. Okay, also there is no engulfing, nothing. So the Dow Jones is indicating just a normal and intraday bullish or an initial or intraday bullish movement, but it is not confirming. It is not confirming a gap up open. Absolutely not. And also the intraday and initial bullish movement is not strong, not as strong as it is seen in the S&P 500 and in the Nasdaq. Okay, so overall we can conclude that on Monday, irrespective of any open, there will be an initial or intraday bullish movement. Okay, but at the same time there was heavy manipulation. The market is going to move up. Market is now in the S&P 500 is now in the 55xx range. This is where it is going to meet the moving averages, and there are many other technical factors. So S&P 500 will now feel pressure. Now let's talk about the technical indicator. But guys, before that, if you have not yet subscribed to my YouTube channel, then subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, what we know is that moving averages bearish. So S&P 500 is bearish through the moving averages. S&P 500 is neutral through the Ichimoku cloud. S&P 500 is bearish through the Bollinger Bands. S&P 500 is bearish through the MACD on the weekly chart. S&P 500 is now bullish through the stochastic RSI on the weekly chart. All of this indicates that the S&P 500 is approx 70 to 75% bearish, not bullish, bearish. Means that trend is bearish. Okay. Now comes the Dow Jones. Almost exactly the same picture. Dow Jones is bearish through the moving averages on the weekly chart. Dow Jones is neutral through the Ichimoku cloud. Dow Jones is bearish through the Bollinger Bands. Dow Jones is same bearish MACD, and the stochastic RSI is bullish. All of this indicates that the Dow Jones is also, it is not 70%, but the Dow Jones is 75% bearish. Okay, whereas the S&P 500 is 70 to 75% bearish. This means that the trend is bearish. Okay, so no change in that trend. right? Now let's talk about the most important thing here, the most important part, and that is the technical obligation to the moving average. So before that, guys, let me tell you one more thing that you must understand. This is the Ichimoku cloud. This is the green part, that green, this thing you are seeing. This is the Ichimoku cloud. Okay. So what you are going to see here is that the market for 4 weeks. Okay. Since the week of 31st of March, 4 weeks, almost 1 month, market is trading inside the cloud. What is the characteristic of this cloud? Okay. That the cloud is an illusion. Okay, whatever is happening in the cloud, okay, it cannot be confirmed whether it will go bearish or if it will go bullish. Only when the market moves either below or above the cloud, okay, it is termed as bearish or bullish. Okay. Earlier we have seen that when there came only one closing below the cloud, market was already 70 to 80% bearish. When there comes one weekly closing below the cloud, we have seen around 5% to 6% fall in the next week. Okay, because in that case it is quite confirmed that market is now absolutely bearish and there is no more confusion, no more illusion. Okay, similarly when the market is trying to move up, so now these moving averages, red and green moving averages, okay, and then comes a white, and then comes the pink moving average. These are moving averages. So market is now when I say market, I mean the S&P 500. Okay, S&P 500. And if I will be discussing the Dow Jones or the Nasdaq, then I will use the terms Dow Jones or the Nasdaq. Otherwise, market means the S&P 500. Okay. So this means that now the S&P 500 has entered into the cluster of the moving averages. Now, because the week is over, the moving averages were coming down. Moving averages are coming down. S&P 500 is going to test the moving averages. Moving averages will be above 5,555, okay, or 5,550 or so. Okay, means in between 5,550 and 5,600. In between, in these 50 points, moving averages are expected to be there. Okay, in the next week. Okay. However, if there comes some drop, then it can even trade below 5. Then the 50 point zone, it will increase to 60 or 70 points. Okay, but what I'm trying to say here is that the S&P 500 has now entered into the condition wherein it is going to fulfill its technical obligation. Dow Jones is also going to fulfill its technical obligation, but because the Dow Jones is quite far from the moving averages as compared to the S&P 500, okay, this means that S&P 500 can test the moving averages, can even breach the moving averages a little, not a problem. Okay, and when the Dow Jones moves up, Dow Jones tests these moving averages, fulfills the condition. Okay, then perfect. This means that the market has already fulfilled all of these conditions. Now, what will happen after fulfilling the technical obligation? After fulfilling the technical obligation, okay, it will be time to re-enter into the trend. Re-enter into the trend means around 20% continuous fall will be there, right? But this will not happen within a week. It will take 2 to 3 weeks or 4 weeks or entire 1 month for this the 20% fall. Okay, but this will be in one leg. One leg means like this. This will be the one leg, then a retrace, then the second leg, then a retrace, then the third leg. In one leg, 20%. Okay. Now one more thing. If the S&P 500 moves up, okay, it is testing the moving averages, but at the same time Dow Jones has not even tested the moving averages or is struggling to move towards that moving averages, then definitely it will be able to move up. But question is that once the S&P 500 tests the moving averages, reaches the moving averages, then to what level it will be able to move up? It will enter into 5-6xx. Okay, into 5-6xx. There comes my very heavy resistance zone in the 5-6xx. After entering into the 5-6xx, very heavy pressure, it will struggle, and from 5-6xx it will come down, and 20%, if I calculate from, let's say, from any hypothetical level of the 5-6xx, okay, then that 20% will be somewhere around 4,500. Okay, it will be there, right? Now let me show you how it is going to work. So in this case, in the S&P 500, I've shown you the same, okay, earlier also, if you have subscribed to my YouTube channel. This was 2022, okay, 2022. What happened in this time period in the 2022, that there was fall, okay, forced movement, again above, fall, again above, okay. Now it moved up, tested the moving averages, even breached the moving averages, closed above the moving averages. All of this, that time was indicating that now the trend is going to change to absolute bullish. There is no bearishness, nothing, okay. But then what we have seen, a change, failure from my heavy resistance zone, came down, and then a 20% fall. Moved up, 20% fall, 15 to, I think this was 17% fall. Okay, so the most important part here, okay, in this, again, so that time also the market was heavily manipulated, okay, and you yourself can clearly see that this kind of heavy manipulation, very heavy bullish movement, very heavy, okay, around 10% within a week. The manipulation is always done to change the short-term picture, to change the short-term trend and to trap the retail users. Okay, and then once the short-term trend or once the short-term picture is changed, then everywhere a scenario is created or a news is broadcasted that now market is very well, market is doing good, it will be bullish, it will go bullish, and then the retail traders, okay, they then the retail traders, they participate in the rat race, okay, they start to buy. When they start to buy, then at that the precise movement, okay, the market will come down heavily and the retail traders will be trapped. Okay, anyway, what I'm trying to show you here is in this case is the that there was no confirmed bullish crossover in the moving averages. This is exactly what I've shown you earlier also. Okay, so when the market tested the moving averages, moved up, okay, there was a scenario that now it is going bullish. It has gained so much that there is nothing like bearish. But the technicals were telling us a different story, that no. And then what we have seen, a slip, a bearish slip. So what do I mean by slip? Slip means that moving averages were supposed to give a bullish crossover. However, that bullish crossover did not happen. Rather, there was a slip. Okay, means the continuation of the trend, in simple words. Okay, so guys, you need to understand that manipulation, okay, it is an essential part of the market, of the stock market. It is not restricted to one country or one region. No, since the beginning of the stock market, since the stock market or this the trading, okay, it began in 1600 century, okay, or in the 16th or 17th century. Okay, the manipulation was always there, it is there, it will remain there. The only good thing is that manipulation happens like once in a month, and I'm talking about the indexes, S&P 500, Dow Jones, once or twice in a month. Okay, otherwise the market trades through the technicals normally. Okay, and but in case of the stocks, okay, manipulation can happen anytime. So whenever manipulation happens, the purpose of manipulation is to change the short-term trend. Okay, if it is coming down, then it will be changed to bullish. If it is moving up, then it will be changed to bearish. And even though there was very heavy manipulation in this the previous week, but still I managed to help my Patreon community members, okay, by telling them that what is happening, what is going to happen, okay, when we will see 5,500 range, okay, what will happen to the 5,004 or 54xx range, okay, what will be the condition for the fall, okay, what will the condition for the bullish movement. So in this manner, on Tuesday when the manipulation happened, then I predicted that, okay, now 53xx will be there on Wednesday. Okay, now on Thursday I predicted that on Friday it will enter into 55xx. So whatever was happening, I was keeping my Patreon community members updated, informed through these daily precise updates, which I gave them every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, daily precise updates, so that they are very well aware of what is happening, what will happen. And also let me tell you that it is not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday. But I also give the stock market opportunities in the premium stocks of the US stock market, top 30-40 companies of the US stock market, minimum 5 to 10 opportunities every week. And that's not all, because I also give the mid-week update technical analysis. This is the video technical analysis, just like the weekly technical analysis. It is given every Wednesday or Thursday. Okay, so here in this case, after the manipulation day, okay, I've clearly discussed the cases, because on that day it was in the 5, the S&P 500 was trading in the 52xx. So I predicted that 54xx will be there, and then 55xx will be there. Okay, based on this condition 532x. So in this manner you are going to get the daily precise updates, the stock market opportunities, and the midweek update, video technical analysis, everything. So I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And when you scroll down, then you will see that there are these 3 levels: level 1, level 2, and level 3. These 2 levels are same. The only difference is the geographical location. So when you participate in either of these 2, then you will be getting all midweek update videos. Okay, the video technical analysis every Wednesday or Thursday. Daily SP500 analysis, updates, movement, levels, zones, momentum, okay, opportunities. Stock market opportunities minimum 5 to 10 every week. But guys, this level 3 is very special, because whatever you are going to get here, by default you will be getting the same: all midweek update videos, daily SP500 analysis, updates, movement, and everything, stock market opportunities. Okay, so whatever is mentioned here you will get by default here. Okay, but other than that you will get one Zoom meeting. Okay, it will be one-on-one Zoom meeting, just me and you will be there. Okay, and I will teach you. Okay, what I'm going to teach you. Okay, I will teach you, or I will share with you the entry and exit secrets: when to enter, when to exit, okay, when to maximize your profits. Okay, now, and one premium hack. Okay, the hack that I share, it works almost 100% of the times with almost 100% accuracy. You can predict instant movement, instant fall, okay, or rise, or gap up, gap down, or anything like that. Okay, one trading or options strategy. Again, this strategy works with almost 100% of the times with almost 100% accuracy. Okay, then the modified technical indicators. So I use the modified technical indicators. Okay, that is why I am able to predict the movement even before it is seen. Okay, the change, or these are things. Then I will share with you the options premium calculator. I will tell you how to calculate the premium value of any option. And you need not to fear about anything, because 97 to 98% of the options traders, they do not know how to calculate the premium value of the option, and they are trading blindly. So in this manner, this level 3 is very special, because you are going to get much more what you can expect. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, and years, and they are getting these daily precise updates every day from Monday through Friday, and they know what is going to happen, what is happening, what will be the implications. Okay, they are very well aware of everything, and even in the high or even in the heavy manipulation times, okay, they are trading with confidence, because they know the numbers, they know the movement, they know the momentum, and everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay, one candle means one day. Now let's first analyze the candle. Now if you notice, this is the last candle. Okay, it's a normal bullish candle. But the most important part of this candle is that the open price of the candle and the closing price of the candle both are above the previous candle. This makes this candle heavily bullish. Okay, heavily bullish. Heavily bullish. Other than that, if you notice that the closing of these last two candles, okay, one and one, these two candles, is above the moving averages. So further it will be seen or considered as a heavy bullish candle or a good bullish candle. Okay, This candle indicates, or this candle says, that there are some chances that on Monday there will be a gap up open. Okay, or irrespective of any open, there will be an initial or intraday bullish movement, right? What we have seen on the weekly chart, no confirmation of the gap up open. No, the only confirmation is that initial or intraday bullish movement will be there. Now, this is the Dow Jones. This is the last candle of the Dow Jones. It is exactly opposite to what we have seen in the S&P 500. No heavy bullishness or no good bullishness. Okay, open and closing is also means open is below the previous closing and closing is also around the previous closing. Okay, 0.05% gain only. Okay, so this candle does not confirm any gap up open, simply an initial or intraday bullish movement. That is because it managed to sustain above the moving averages. That's it. Okay, all of this indicates, considering the weekly chart, considering the daily chart, okay, now it is quite clear that there may not happen or there may not come a gap up open. Okay, if there comes a gap up open, that will be only and only because of the S&P 500. That's it. Okay, but what we know is that irrespective of any open, there will be an initial or intraday bullish movement on Monday. Okay, now this is very much clear. Now let's talk about the technicals. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And also, if you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now, let's talk about the technicals. In terms of the technicals, now the movement is above the moving averages. Okay, so in this manner, it will be neutral. S&P 500 is neutral through the moving averages on the daily chart. S&P 500 is bearish through the Ichimoku cloud on the daily chart. S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the MACD and the stochastic RSI on the daily chart. So this now puts the S&P 500 in a neutral condition, that S&P 500 is now 50-50. It is neutral. It is neutral, but is still bearish. Okay, why I'm saying bearish? Because it is trading below the Ichimoku cloud. So it is neutral, no doubt about that. Neutral means that now it does not need any more manipulation. It has already turned or moving into the bullish side. Okay, so now the technicals will help the market to move up, and manipulators need not to waste their money, okay, or the time or the efforts. But still, okay, it is in the bearish side, and the Ichimoku cloud here, okay, it comes in the 5008x 58xx range. Okay, so this does not change anything. Now let's analyze the Dow Jones. In case of the Dow Jones is neutral through the moving averages. On the daily chart, Dow Jones is bearish through the Ichimoku cloud on the daily chart. Dow Jones is bearish through the Bollinger Bands on the daily chart. Dow Jones is bullish through MACD and bullish through stochastic RSI. So Dow Jones is also kind of neutral, 50-50 on the daily chart, but still it is in the bearish side. Neutral but bearish. Okay. So now what does this mean, that neutral and bearish? Okay, so as I mentioned here, neutral and bearish means that the market is moving up, fine. Market will be moving up further, fine. But this movement does not mean that the market is going to change its trend. However, there is an interesting thing, okay, so that I will tell you, and through that you will come to know in actual where some big change is happening or not. And that is through the moving averages. Okay, the two very standard moving averages. I will show you, okay, that the movement. But what we know is that so far the market is trading bearish. Okay, it is in the bearish trend. Okay, this bullishness is the short-term bullish movement just to fulfill its technical obligation to the moving averages, and then eventually it is going to fall. Okay, one more thing, that market is going to get the bullish support because of the earnings season. Okay, now in next 1 to 2 weeks the earnings season will be over. Okay, so whatever bullishness we are going to see here, it will be there for next 1 to 2 weeks only, when the primes of the S&P 500 will post the earnings. Means in the next week almost it will be over. However, guys, you need not to worry about anything. Okay, this kind of heavy sudden or this a movement. You just need to know how the stock market works. You just need to know the technicals. That's it. And you'll be absolutely safe. While the others will panic, you will make money. And for that, there comes my S&P 500 knowledge transfer program. Through this knowledge transfer program, whatever I know, whatever I've learned, okay, in last many years of my research and everything, I share everything through this program. And when you participate in this program, then within a maximum of 30 to 45 days, okay, you will be able to learn a lot of things which otherwise will take more than 2 3 years or 4 years. And I cover everything from the basics to the advanced, the technical indicators, the modified technical indicators, okay, the trading strategies, okay, and the kind of tradings, okay, that are there, but in a different manner, okay. Then how to get the credible information, news information, etc. Then the options in very detail, options calculator, options trading strategies, the strategies, okay, that I use in a very different manner, and that works with almost 100% of the times with almost 100% accuracy, okay. Then the live options calculation through the options premium calculator, support and resistance levels, okay, how to predict the movement of the market, how to deduce the trend, how to predict even before it happens. Then comes the hacks. These hacks works almost 100% of the times with almost 100% accuracy. Then comes these basic terms and conditions, my email address, okay, then the snapshots of the recent meetings. So guys, if you want to play safe, if you want to be in the winning side, if you want to learn the market, how it works, what are the key indicators, what are the key factors, the technicals, the patterns, how to recognize the patterns, the hacks, everything, then you can participate in this program. Okay, this is my email address. Okay, whenever you want to participate in this program, or if you have any questions that you want to ask, okay, then you can simply send me an email. Okay, I have given the link to this Google spreadsheet in the description of the video and also in the comment section. And guys, other than that, there are these the three products, okay, and these are related to the hacks and the options. And you will find these under the shop section on my Patreon page, on my Patreon profile. Okay, when you scroll down, okay, you go to the shop section, you will find these products. So if you want to learn the hacks, the premium hacks that works almost 100% of the times with almost 100% accuracy, okay, then these are the products. And also this is the options trading strategies premium calculator, this program, everything about the options in this product. So if you're looking for very specific only the hacks or the options, okay, then you can visit my Patreon page, and under the shop section you will find these products. And I've given the link to my Patreon page, my Patreon profile, in the description of the video and also in the comment section. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 and in a manner to the entire market, means what is going to happen in the US stock market in the next week. Now, also here I will tell you the very important concept, you can say, okay, or a rule of the stock market, okay, and through that rule I will tell you that why this is not going to work, rather chances are very much okay for this kind of movement, okay, and why the manipulators has forced the market, okay, here and here, okay. Now before that, a few important things that will impact the market heavily. It will be Wednesday. Okay, Wednesday the inflation data, PCE, and the core PCE data will be released in the morning. Okay, this will heavily influence the market. If the inflation data goes against the market, expect fall, or a good fall or a heavy fall. Okay, then the bullish movement will stop. This means that the market, the S&P 500, has Monday and Tuesday to fulfill its technical obligation to the moving averages. It should move up, it should test the moving averages, and then by Wednesday it should be in a condition wherein if there comes an adverse data, okay, means inflation data, which shows that the inflation is sticky and there is stagflation or something like that, which is not favorable to the Wall Street, then market will come down. Okay, only Monday and Tuesday, 2 days are there. Then comes after Wednesday, then comes Friday. Okay, unemployment data and the non-farm payroll data, again very heavy. Okay, volatility will change. Other than this, from Wednesday onwards, Okay, the top or the primes of the S&P 500 will release the earnings on Wednesday. Microsoft after market hours will release the earnings. Okay, and I think Amazon will also release the earnings on Wednesday after market hours or on Thursday. The impact of the earnings of the Microsoft on that will happen means it will release the earnings after market hours on Wednesday. Its impact will be felt on Thursday, heavily on Thursday. Okay, now because Microsoft is one of the primes in the Nasdaq, S&P 500, and the Dow Jones, in all of these three, this means that all of these three indices will be affected, will be impacted. Okay, then comes Friday, then comes Thursday. Thursday after market hours, Apple will post the earnings, Apple will release the earnings. This means that its impact will be felt on Friday. Okay, and on Friday the unemployment data will also be released. Okay, and the non-farm payroll data. So all of this indicates that from the Wednesday onwards, market, the volatility will increase. So Wednesday, Thursday, Friday, these three are very, very important days. You will see sudden up down or unexpected gap up or the gap down open because of the events and the earnings. However, you need not to worry about anything, because if you are my Patreon community member, then I will keep you updated, I will keep you posted, I will keep you informed through these daily precise updates and also through this comment post. So this means that the market is going to get the support, whatever kind of bullish support is there, market will get only until Friday, not in the next week. So after May 2nd, okay, there is no bullish supportive movement or the event. Okay, yes, in the second week, I guess there will be a press conference of the Fed chairman or the FOMC event will be there, but that will be in the next week. Okay, this means that whatever bullishness, whatever bullish support market can get, technically or non-technically, manipulated or non-manipulated, okay, only until May 2nd. That's it. Now, before I tell you the numbers, the movement or so, let me tell you one very, very important rule of the stock market. This will keep you safe. Okay, so what is that? But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, the rule of the stock market is that this is the Dow Jones. Okay, just for example, I'm considering the Dow Jones. Now you will see these are the two moving averages. Okay, one is 50-day moving average, the other one is 200-day moving average. Okay, the technical traders who are watching this video, okay, they will understand immediately what I'm talking about. So what happens is that whenever there comes a crossover, a bullish crossover or a bearish crossover in these two moving averages, okay, this indicates the bullishness or the bearishness, means the continuation of the bullish movement or the continuation of the bearish movement. So now what happens in this case? Okay, there is a bearish crossover in the moving averages. Okay, so what happens is that this bearish crossover indicates that now the bearish movement has started. The bearish movement has started. This is why if you notice, on 16th of April, there was a bearish confirmation, okay, that this has happened. On 17th of April, there was open equal to high condition. Market gave up, okay, fall and fall, okay, and the fall was supposed to continue until the market manipulators came into the picture and they saved the market. Okay, so this confirmed bearish crossover indicates that now the bearishness, now the bearish side movement has started. Whenever the bearish side movement, when I say the bearish side movement has started, this means either there will be the correction or the recession. Only these two scenarios will be there. This means whatever fall we have seen here, okay, whatever fall, let's say in Dow Jones, this fall was very limited. It was only 20%, 19% fall, only 19% fall. Okay, so this 19% is nothing, it is not enough. Okay, 20% more fall must come. Why? Because of this condition that which says that either the correction or the recession has started, right? Now, historically we have seen one or two times, Okay, when the market, after seeing this kind of condition, the market within 4 to 5 days has retraced back and compelled. There was very heavy manipulated movement, and the market has compelled the moving averages to again give a bullish crossover. But this must happen within a week. Okay, not more than that. However, in this case, if you notice, 1, 2, 3, 4, 5, 6, 7 are already gone. Okay, and there is a huge gap. This gap cannot be filled even in the next week. Okay, this means that around 15 days will be there. This means that this crossover is, the bullish side crossover is now not anticipated, is now not expected. When I say this thing, okay, this bearish crossover, then I'm not just talking about the Dow Jones. It must happen in the S&P 500, in the Nasdaq. Okay, Nasdaq we can simply neglect because it is the, because it is the pure tech index. Okay, and is the, and is also the heavily manipulated index, whereas Dow Jones and S&P 500 are the standard indices. So let's say if there comes this bullish crossover in these two moving averages in the Dow Jones, but at the same time there is no bullish crossover, no this bullish crossover in the S&P 500, then we will have to wait until the S&P 500 has also given this bullish crossover in the moving averages. This crossover is also there in the S&P 500. Okay, and that crossover is even heavier as compared to the Dow Jones, very heavy. Now back to the S&P 500, the movement. So here in this case, what we know is that S&P 500 is moving up. It is moving up to test the moving averages. Moving averages are in the 50 points range, in between 5,550 or 5,555 and 5,600, in this range. Okay, the moving averages are there. And I'm talking about the moving averages on the weekly chart, not on the daily chart. No, I'm talking about the moving averages on the weekly chart. So this means that the market is going to move up. This is very much clear that the closing yesterday was 5525.21. This was the closing. So it is already in the 5,500 range, 55xx, 5,500 range. Okay. So now it is open until 5,600. Okay. Although there is a very heavy resistance level below 5,600, so it will remain okay up to that mark. Okay, so from here to up to that mark, it is allowed, it can move up. So that's not a problem because it is, the lower level technicals are already 100% absolute bullish. Those technicals will push the market up higher. So manipulation is now not required. Okay, because now it is going to move up. Now the most important part is, the most important part here is that what happens when it hits the moving averages. So this means that when it moves up, then this heavy resistance level is 558x. So when it moves up, it is allowed to trade to 558x. Between 558x or around 558x, there will be one moving average. The other moving average will be in 5,500 5x or 6x range maybe. Okay, so see, once the market opens on Monday, then immediately the value of the moving average will known, and I will update you, I will inform you through the through my comment in the comment post. Okay, or even in the pre-market analysis. Okay, I'll tell you. This means that the bullish side movement is allowed. Okay, but is allowed up to what? Is allowed up to 558x. Yes. So is there any chance, question is that, is there any chance that the market can move up beyond 558x and can enter into the 5,600 range? Yes. Okay, but this is heavily conditional in a manner that first we need to see what the market is doing, what is happening at the moving averages. Other than that, Monday and Tuesday, only 2 days, market has only 2 days, Monday and Tuesday. Okay, on Wednesday onwards, the events and the earnings will be in the picture, and then the market will be compelled to move up or down based on the events and the earnings. Okay, but Monday and Tuesday market has the chance. So now we are anticipating that irrespective of any open, the market will move up. Okay, in an initial or intraday bullish movement will be there on Monday. Okay, market moves up, market tests the moving averages. Okay, and then it is struggle to clear the first moving average, that will be in the 60s or in the 70s. Okay, then in that case, What will happen? In that case, the market will come down, hold, then again on Tuesday it will test. See, the situation will remain good. I will say the situation will not be bad. The situation will remain good as long as S&P 500 is holding and sustaining above 5,500 psychological mark. Simple. As long as S&P 500 is holding and sustaining above 5,500 psychological mark, situation will remain in favor of the bulls. The market will remain bullish, even if there comes an intraday fall. But the market sustains and keeps on closing above 5,500. Although there are these the two strong level, one is above 5,500 and one is just below 5,500. These two levels will play a very important role in defining whether the market is going to fall or if it will remain bullish and will try to move up. Okay, now what happens, okay, let's say the Microsoft, Apple, okay, all of these are tech giants post the earnings which were as per the expectations of the Wall Street and everything, it is bullishness or everything. Okay, in that case it will enter into 5,600 56xx range. Okay, but for the confirmation we need two consecutive closings above 558x, two consecutive closings. Okay, once that happens, then where it will be heading to? It will be heading to 565x, and my calculated resistance level is below 565x. So what is so special about 565x? It is the 61.8% of the favorite retracement level, and also when it moves into the 565x, then it will enter into the Ichimoku cloud here on the daily chart. Okay, 61.8% favorite retracement level. Okay, technicals on the daily chart and also technicals on the weekly chart. Everything will then put downward pressure on the market in a manner that there will be more than 90% chances that the market will give up from this point, somewhere around this point. Okay, so this is the best case scenario. This is the best case scenario. Okay, so bullish side will work like this. Now, in the bullish side, whether the market will be having any chances to move up or not any further, okay, it will be defined by 555x range, sorry, 555x. This is my calculated support level. On Thursday also I mentioned that when it moves up or it closes in this condition, it will enter into 55xx range, where then we will be anticipating 555x, because then it will be moving towards the moving averages. Okay, so two consecutive closings above 5,505x. Okay, means market is now in a very strong position that it can try for and can actually gain the 558x. Okay, once 558x is also in the picture, then comes the final. Okay, that will be the last point. What about the bearish side? The bearish side will remain limited. Bearish side conditional and will remain limited. For the bearish side to happen, first comes the 5,500 psychological mark. This is not my calculated support or resistance level. This is the psychological mark, 5,500. Okay, but most importantly, there comes the 546x. This is my heavy. This was my heavy resistance level. Okay, but now it is acting as a support level. Yesterday also the market has sustained and closed above this level. Now, only when there comes two closings. Okay, well, in general, there will be only one closing is required. One closing will be more than sufficient, because market will be coming down after completing this cycle, short cycle. So one closing is sufficient, but still to be on the safe side, two consecutive closings below 546x. This will indicate, this will confirm that now the market is heading to what? Market is heading to 52xx range. 52xx range means around 5% fall will be anticipated. This may or may not happen instantly. This might take an entire week, but this will then happen. Two consecutive closings below. Although there is one more very heavy, very strong support level is there, that is 532x. Okay, this will then further confirm the 522x range, but a fall to this, the 522x will be open, 532x will be kind of confirmed. Okay, this will be there. But yes, the most important part here is that once it comes down. Okay, so now what we are anticipating is that S&P 500 will be coming down to 546x only after fulfilling its technical obligation to the moving averages. Okay, this means that there will be a failure, a rejection. It will be coming down. It is 546x. Okay, coming down, losing two consecutive closing means that this bearish cycle has started, wherein we are anticipating 20% fall. Okay, so that is why this 5466 is very, very important. This is why again and again in last many days I mentioned that 546x it will remain there in the picture. 546x will be there in the picture. Okay, again and again to my Patreon community members. When the market was moving up, then 546x was acting as heavy resistance. Now that the market has moved up beyond and sustained and closed above 546x, so now the same 546x will act as very heavy support for the market. So in this manner, 5500 at first, okay, a sustained movement closing above the 5500 means bullish, no doubt it will remain bullish. Okay, and it will be looking for this the 558x. It will be testing the moving averages, fulfill its technical obligation, will move up. Okay, definitely 100% the critical levels of the Dow Jones will also play the important levels of the Dow Jones will play a very, very important role, okay, in this the movement. Because now you can notice, you can clearly notice that Dow Jones is lagging behind, okay, the in this case the market. If you notice, this was the high, okay, on 9th of April, 11% movement. Okay, now the market has given two consecutive closings above this the previous, this the high. It is allowed to move up, means the S&P 500. In case of the Dow Jones, what is happening? Dow Jones is struggling. It is struggling. Dow Jones has not even tested these the previous high levels. No, that is why, okay, when the S&P 500 moves up, fulfills the technical obligation to the moving averages, Dow Jones moves up. Dow Jones, the moving averages will be somewhere around here. The Dow Jones will then test this the previous high. We need two consecutive closings. Then comes, okay, around the same comes my very heavy resistance zone, because of which we have seen again the consecutive failures here. Okay, so if you're my Patreon community member, then I will share, okay, this particular the range, okay, when I will share the numbers of the levels and the zones of the S&P 500, because both of these conditions in the S&P 500 and in the Dow Jones must be fulfilled, so that we can say, okay, market is now good, market is holding, okay, market will go bullish. Because if S&P 500 fulfills but Dow Jones fails, then most likely, highly likely, it will fall, will lose, no more bullishness. Okay, the retail traders, they will participate in the rat race here, they will be trapped and a fall. This is how the market is going to work. But you need not to worry about anything. Okay, through these daily precise updates, I will keep you posted, I will keep you informed. Okay, so while the others will panic, you will not. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. And guys, other than this, there is my S&P 500 knowledge transfer program, okay, and the hacks, you can participate in that program, and through that you will be in the winning side while the others will lose. You will not panic, okay, because you will know everything what is happening, okay, what is going to happen. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.